All right, let's talk about the mystery charts and the methodology in action. As I've been saying quite a bit, the missing piece for me early in my career was actually seeing someone trade. And once I actually saw that, it began to click with me, even though what they were doing was much different than what I was attempting to do. I was able to see an actual trader trade, and that helped me out. And then I was also part of a hedge fund early on doing consulting for them, and I actually saw him place a lot of trades and begin to understand his particular methodology. Again, nothing like I was attempting to do, but at least it's good. It was good to see somebody actually do something. So if you could see me follow my system, and believe me, I'm not the best in the world when it comes to discipline. You know, ask my wife, you don't believe that. But when it comes to my trading service, because I am putting these trades out there, and I'm going to show you the actual trades, what it looks like. I took a snapshot a few minutes ago, right before it went live. It's like, you know what? It's like I couldn't believe that the one position was worth that much, and I was kind of shocked. And we'll get there. But anyway, to actually do it, and then I have to try to mimic what I'm saying that you should do. Why should I tell you to do something? This is in the trading service if I'm not going to do it myself. Anyway, this is TFPM. We got in this one back in May. Nice little uptrend. This is a prior mystery chart. Mystery charts are charts that I show before they trigger. Obviously, they're a mystery because I don't say what they are unless you're in the service. But I think it's a lot of fun to say, okay, well, Dave just showed me a setup ahead of time. I don't know what the setup is, but let's just see how it shakes out. And I follow up each week. But anyway, nice trend. And notice that you had Landry light the whole way. You had a couple days with zero Landry light. That means that the lows touched the 30 EMA in this particular case, but that's okay. And again, as I preach ad nauseum, Landry light just counts the number of bars that the lows are greater than the moving average, or uptrends, and highs less than the moving average or downtrends. Very, very simple stuff. Just in case, you know, if you want to kind of geek out a minute, someone years ago from the Bronx had emailed me and called me, and he read an article that I wrote in 1990. I wrote it in 95. I think it was published in 96 in Stocks Commodities Magazine, where I was talking about a breakout from the moving average, a 220 EMA breakout system. And he labeled it daylight because there was daylight in between the bar and the moving average. And then eventually it became Landry light. But anyway, pull back to the moving average. That's a great little pattern. If you only traded one pattern, I think that would be it. Linda Rasky once said, as I preach, you only need one pattern to be successful. And people, well, what's the one pattern? It's like, well, it would be Landry light pullbacks. Very simple to recognize, very simple to scan for. And with a little practice, very easy to recognize the best setups. As I preach each week, you want acceleration. Notice that this stock accelerated higher. It trades cleanly, meaning that it tends to go up day after day after day. The corrections are fairly orderly when it does correct, because stocks will correct, and you do want them to correct along the way, obviously. And that's what gives you your setup. But this is a gold stock, and for a gold stock, that's pretty impressive, because usually gold stocks, because of the underlying commodity, is kind of choppy and very efficient type of market. Gold stocks also tend to be kind of choppy. Anyway, entry was there, stop was down here. Initial profit target up here. So let's see what happens. Not a whole lot. It triggers, comes back in, and you're about 2 weeks into the trade and you're losing money, and you're not very impressed with Big Dave's methodology at this point. So you're probably thinking about bailing because it's dead money. Now, they don't always come back. As I'm going live, I'm thinking, like, I need to make sure I say that again this week. They don't always come back. But as you can see, it pays to just follow your plan for when they do. And we've had a lot of dead money type of situations lately. Dead money is money that has little or no chance of further appreciation. However, you don't know that, okay? So that's where you just follow your plan and honor your stop. So you bank 1,000. This is per 100K. And it's no longer a dead money, at least at that point. Stop goes to break even. So the worst you could do, barring overnight gaps, is break even on the remainder. Let's see what happens. It meanders, sells off a little bit, goes sideways, 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 sideways. So now we're stuck in this trade. What's that? 3 months, okay? Now we're above water, meaning that we're profitable, but we're not gaining any ground on this thing. But we're still above that entry, so that's good. We did take $1,000 off, so that's good. So let's just let the chips fall where they may. The market doesn't always move on your time frame, and I'll get into that in a few minutes too. So once again, 3 months of little or no forward progress, or at least 2 months of little or no forward progress. So once again, it's become dead money, right? Well, you don't know it's dead money, and then it comes back nicely, and then it begins to trade back and forth a little bit, and then it begins to start banging out some new highs and works its way higher. So when the stock moves in our favor, we begin to gradually loosen that stop, okay? And we're not moving the stop away from the position, we're moving it with the position. That's a very important thing to remember. When I say widen the stop, you widen the stop, you let the instrument, the stock or crypto, whatever you're trading, futures, pull away from your stop, and then you bring up your stop, but not necessarily on a one-for-one basis. You allow it to gradually open up over time, and you're adjusting to the longer term volatility of trend following, and you're also adjusting to the fact that as the price goes higher, it's going to require a wider stop just by percentage moves alone. So if the volatility stays normal and the stock goes up in price, so now let's say a 5% move is a much bigger number point wise than it was when the price was at when the stock was at a lower price. Now, also keep in mind, if you're doing this right with the trend following and your setups, and you're picking the best setups, and you're getting into the acceleration and persistency and all those great things that I talk about, ability for the stock to trade cleanly, then ideally the volatility is going to increase too. So you're adjusting to all that long-term stuff. Now, I know I say this every week, but if you were to be a pure longer-term trend trader, your percent correct would be about 27%. So 3 out of 10 times you'd be right, or another way of looking at it is 7 out of 10 times you'd be wrong. Okay, and that's a tough way to trade, and also your drawdowns are abysmal. A lot of the turtles blew up after the fact. I'm not being Schadenfreude because what they did was really amazing, but during the program they did very, very well. They were in a very good trending market. So I've since, I shouldn't say since, but early in my trading, I should say, I was trying to be that pure trend follower, but I quickly learned that one, it's tough because you're going to be right 3 out of 10 or wrong 7 out of 10 times, right? And then number 2, your drawdowns are abysmal. So my way to mitigate that and try to improve upon those odds is taking partial profits and getting that stop up to break even, and then trailing a stop on the remainder. And even though you only have half the position on, that's plenty. As I've done many presentations before, go back over the last 6 months or so, and I talk a lot about open profit drawdowns, and those are kind of tough. And some of those are really, really substantial. But when you stop out, let's say this thing stops out or whatever, and you make a couple $1,000s overall in the trade, you look at the fact that you made a couple $1,000s, you say thank you to whoever you pray to, thank you, Market Gods, thank you, Jesus, 8 pound, 10 pound, 10 ounce baby Jesus, or whatever. And you'd be grateful for that, as opposed to focusing on how much money you gave up in the end. I just slipped in a little trading psychology there, but there will be blood. There will be a lot of open profit drawdowns. And I was thinking as I went live, that's one of the things that the Turtles, specifically one of their leaders, Eckert, was okay, or it was Dennis, I think. Dennis was okay with open profit drawdowns. He had a problem if you had a big loss in something and you weren't honoring your stop, but it came with the territory. You have to be willing to give up money to make money, and these open profit drawdowns could be substantial. But if you look at some of the ones we're in, we're up 40 or 50 or 60%, maybe a little more on some of them. So at the end of the day, maybe you only make 30% or so on the trade because you allowed that to draw down, but at least you made a substantial amount of money. The other thing too is, by allowing that open profit drawdown, a lot of times you're able to ride out those corrections. As you'll see with some of these other examples, we've been in them for months and months and months. And knock on wood, especially in the case of the golds, they're doing really well. Now, I've been talking a lot about using discretion, but not throwing caution to the wind. So this was a stock that stopped out recently. Yeah, I do occasionally have a losing trade, believe me. If I didn't, you'd never see my fat ass. And the stop was down around, I think, like 12.20 or so. And as I said last week, go and watch last week if you want to know the details on how to apply a little discretion on the stop. Sort of nick. In this case, it was a little bit more than nick. I admit that. It went a little further than the stop. But it had closed poorly the night before. There were some earnings involved or whatever. So it's like, okay, we know we're going to get whacked on the open. If we can survive that opening range, okay, with a little bit of wiggle room on the stop, and again, I'm not saying throw caution to the wind, then maybe we could stick with the position. Now, this thing hasn't done a whole lot since. It's kind of been kind of lackluster, but I'm still in it, in for a penny, in for the pound. Somebody in the Facebook group was wondering if anybody else was still in it. Like, yeah, I'm still in it. I think he used a little discretion. He's still in it. So we'll see how it shakes out. Now, this was not a perfect example. I've had examples where they've had a print at the stop and never actually traded there. I don't know how that happens, but whatever. It's all digital, right? What you're seeing is all digital. So who knows? And I've had other cases where it stopped out by like 1 penny. Okay. And so in a case like that, it's okay to give a little wiggle room if you're disciplined. If you're newer to trading or newer to the methodology, then by all means, follow things mechanically and then improve upon them from there. So here's the KGC. This is the gold stock. Kind of a double top knockout-ish type of pattern, a little pullback to the moving average. And there's the parameters down there. By the way, if you want to look at the archives of these, davelandry.com/archives. If you want to see the last maybe a week or so old, then go to my YouTube channel, YouTube/Dave Landry, and look for Dave Landry's core trading service there. And you can, and I make these public as quickly as possible. Once the setup triggers and all, then I usually make them public within a day or so. But anyway, so there's the KGC trade. Entries here, stop is down here. And by the way, the magnitude of the move on these that we've been in for a while doesn't look that big, but it's a fairly substantial move. That's like about a 50% run, just kind of eyeballing it over here. Okay, so that's a lot more impressive than it looks, because fortunately it has moved in our favor. Initial profit target up here. You can see it triggers and it bounces around and bounces around and bounces around and bounces around and bounces around. Okay, so in this particular case, you're about 2 to 3 months into the trade and you're barely above water. Okay, well, you didn't stop out. The stock only had 1 day, maybe 2 days, where it closed below the 30 EMA, and your stop is still a long ways away, so there's nothing to do. And Ken Lambert once said, doing nothing is harder than it looks, and it really can be, especially if you're a motivated people. And most people who want to trade are motivated. Now, this people just want to get rich quick, which, everybody wants that, right? But the people who are serious about learning how to trade are very, very, very motivated people, which in a lot of cases makes for the worst type of trader. I think it was Eckert that said, speaking of Mr. Eckert, that average intelligence is more than enough, and I fully believe that. I have an engineering a friend of the family that called me recently, a little older gentleman, retired, and he's kind of expressing a little bit of an interest in trading. But this gentleman is freaking brilliant, and I told him, I said, you're probably too smart to be a trader. The only smart people that do well is trading for the most part. I mean, as a general statement, okay, or whatever career where transfer of knowledge actually works, I think would be pilots, because pilots are trained to trust their instruments. They're trained to do things in a certain way, and they're trained to follow proper procedure, because they know that if they don't, they could die or kill themselves and other people, right? Anyway, so dead money, dead money, dead money. Okay, let's just get out. No, stick with the plan, and you end up banking $1,000 here. This is per 100K. And then your stop comes to break even at this point. And then you begin to trail a stop higher. And again, we're letting that stop loosen up. Okay, we're not moving the stop away. We're always moving the stop toward the stock. Okay, but we're not moving it on a one-for-one basis. We're letting things open up and open up and open up over time. And in some cases, like I'll play keep the change. Like if it goes up 50 cents, 56 cents, I might only bump the stop 50 cents. So I got 6 cents on that day, and then I'll keep doing that, and that little bit adds up, and that stop slowly widens out. And that's one of the little kind of games, so to speak. Or if it just goes up a few cents, I don't bother moving the stop higher. I remember years ago when I had a voice, one of the first futures brokers that I had, and I got to know a couple of ladies behind the trading desk and all. And I remember one day I called to loosen a stop on a position. It wasn't moving in my favor, it was moving against me or whatever. And I called to loosen a stop, and she said, "Let me get this right. You want to loosen your stop?" So she knew enough about trading to where she knew that was bad behavior. Now we don't have that anymore because everything's electronic now. So you have to be your own keeper, right? Anyway, I was kind of shocked to see that KGC had 41.70 open in profits. And I said, wait a minute, that can't be that much. And so this is the account I call my model account, so to speak. And I was like, well, let me go take a look at that. And I grabbed a snapshot of it, and I'll be damned. That's 41.70 in open profits on that position. And that's on the mechanical portfolio, is a hypothetical 100K. And in this particular case, 1,000 shares were called for, 500 came off, okay? And then you got 41.70 open. So 1,000 plus 41.70, if I could do that math in my head, I think that's 51.70, okay? So that's better than a poke in the eye. That's over 5% of the entire portfolio and gain. So that's a really good, decent gain. You can see some of the light gains too in here. And look, we got some losing trades too. There's that VG that I use discretion on. And so far it's failed miserably, okay? Well, it certainly hasn't come back. It's come back a little, but not enough. Excuse me. Anyway, so lo and behold, you look at the portfolio and it just happens to be the same price as it was last night, and you have 41.70 in open profits, okay? The KTOS, which we'll look at in 1 second, 32.37. Now you do have a loss in the ABCL and the ATAI. So Dave, we should get out. No, let's just see what happens. And yeah, we might get whacked on those. It happens. Now here's the KTOS. Again, the magnitude of the move doesn't look that fantastic, but if you go back to July and watch some of the presentations, or just back the chart out on your own, you'll see that move is a much bigger move than it appears in this chart. But again, a nice little kind of textbook setup, a nice little pullback, Landry pullback to the moving average. So looking pretty good. And again, in those older shows, by the way, I do go into a lot more detail. So if you go to my YouTube channel, again, YouTube/Dave Landry, go to Dave Landry's Methodology in Action playlist and watch as many of these as you can stand. Again, this is the missing piece. Show me, okay? Show me how you do this. Show me where you're gonna get in. Show me the pattern. Show me why you liked it, okay? Show me where you're gonna stop out. Show me where you're gonna take partial profit. Show me how you're gonna trail that stop. You can look at the archives, and then you can look at the Methodology in Action and see these things happen with zero hindsight, because we're doing all this in real time, right? Anyway, nice uptrend attack, nice little pullback to the moving average, kind of, again, a textbook setup. That's a defense stock. Defense is still pretty hot, as you'll see in just 1 second. There's the spreadsheet for the day. Those were the potential setups, KTOS. Okay, entry was here, stop is here, initial profit target is up here. Let's see what happens. It triggers, it comes back in, meanders, and then takes off. Now, a lot of people, now this is only, let's count the days. We'll count day one as day one. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9 days. You'd be surprised at how many people are going to bail out in 9 days, even though after 9 days you were still profitable in the position. And on day 10, it broke out. And again, this is where you're going to bank 1,000 per 100K. Stop comes to break even. So barring overnight gaps, the worst you can do is break even on the remainder. And this is what happened. And as it moves more and more in your favor, again, we're going to trail that stop higher with the price, okay? Not against or away from the price. And then as of whenever I took this snapshot, you had 32, 37 in open profits. So far, so good there. ABCL, this is a recent one. Uptrend, okay, accelerated uptrend, pull back to the moving average. Again, Landry light pullback. And there it is. Let's see, there it is in the charts, but the entry was here, stop was here, initial profit target was here. Let's see what happens. Now, on this one, I did not take, you'll notice if you go back and look at my portfolio, I didn't take the initial trade. It had this crazy gap open and then it stalled out and came back in. But I do try to mimic what's in the portfolio. And then today I kind of saw it begin to break out. It didn't do anything wrong. So I figured I should go in and put on a position to, again, mimic my portfolio, my hypothetical portfolio. So I am long this stock from a slightly better price. I got in earlier today as it began to break away from the moving average. So it's $360 open if you followed it mechanically. And it's dead money so far, but certainly improving today a little, at least it was earlier. Yeah, it's doing okay. ATAI, this was not a mystery chart. This set up when over the week where I didn't do a week in charts. Again, another little pullback, didn't go all the way to moving average, but I did like the way the stock was performing. Entry was here, stop is here, initial profit target is up here. You could argue that maybe you could have used a little discretion on the entry, maybe enter a little higher because it did sort of find its high and reverse a little bit in early trading. That's fine. I decided to go with the position because at least at the moment it looked like it was doing well. In hindsight, what I probably could have done, now keep in mind when you use discretion, there's always a trade-off, okay? And you have to be willing to live with that decision. But in hindsight, what I probably could have done was watch the daily chart, because if you're looking at a daily chart, this little blip here doesn't look like much. But if you're looking at an intraday chart, it looks like it's going to the moon, and you might get sucked in on that. But mechanically, yeah, you should be long this, and I am long this one personally. So far, not so good. We have minus 272 in open profits, but let's see what happens. Now, keep in mind, all you need is one outlier, one decent trade, and knock on wood, come in. All you need is one decent outlier sometimes to make your entire year. And luckily, we have a few of them in the portfolio now. And that's why you're willing to put up with those losses. All right, any questions, anything thus far? I'll keep rolling, and I know it takes YouTube a second to catch up, but I am watching you guys over there just in case you need something. All right, just real quick, I'm going to breeze through this really quick, and we can pick it up next week and whenever. But years ago, I ran this momentum list, so to speak, the Landry 100, and it was a wonderful exercise. And I think what happened was, well, a couple things happened. The software I was using was no longer being sold or whatever. They ended it. And it was also some work, and the market got really choppy. And it's like, why am I grinding this out? What's coming out of it? And then I restarted it not that long ago, and it's been a godsend. It's been a wonderful thing. And I would encourage you to mimic what I'm doing here. Create your own little momentum list, or feel free to subscribe or become a gold member of DaveLandry.com, and you can get this list for free. You can also get it through my Substack, which is I think it's I forget it. It's at the beginning of Substack.DaveLandry. I'll put a link in post. But anyway, all of these stocks were bought at brand new highs. Now, I did some experiment with this with real money, but for the most part, this is really hypothetical. Whereas the trading service is not hypothetical. Okay, for all intents and purposes, yeah, it's hypothetical, but I'm actually taking those trades. In this particular case, this is mostly hypothetical, although I will take some trades on here. I'm trying to figure out ways for me to personally monetize this through trading. I think if you had a really big account, then you just buy all 100 of them. Okay. And what's going to happen is you occasionally get that 100, 200, 300, and even 3,000% move. And there was one that was up 3,000%. Open profit drawdowns, right, were pretty big. It stopped out, so to speak, at 1,700%, and that was not too long ago. So that one stock made the difference from the closed trades. We're losing money for like a year, and then that one trade made all the difference in the world. So there's your example of the importance of the occasional outlier. And as I've said before, I was criticized once, constructive criticism, for making trading sound so elusive because I used the words streaky and outlier and things of that nature. And I thought about it. It's like, I'm going to keep using those words and keep saying those things because that's what it's all about. That's what the hokey pokey is all about. And that's the missing piece again, is the nuances. Okay, it's like, holy crap, we just got whacked at open profits on this thing. It's like, well, that comes with the territory. Okay, know what to expect. And we got a dog. Dogs are great, but we got a puppy. It's even worse. But you're going to be kept up at night. You're going to get some puppy poop on your floor. You're going to have to walk the dog in the rain. It's a great thing, and puppies are great. And I'm kind of borrowing a line of reasoning from Mike Moody about babies. If you have a baby, you have a lot of baby poop. But it comes with the territory, and learning all these things, learning these nuances is very important. And I'm going to flesh that out in a second when we get to a million little things. But anyway, these were all bought at brand new highs. Now, in this particular case, this is a stealthy new high. It's a new closing high. New closing highs are very, very powerful. One of the aforementioned traders I was able to see trade, he taught me that, and I'm very grateful to him for that, because sometimes you'll get a closing high kind of hidden within some bars like that one there, and that's can be a very powerful type of thing. Anyway, that was the day it was put into portfolio, and so far, knock on wood, 332%. That's a gold stock, gold and silver.